Good morning, good afternoon, or good evening, whatever time it is you're watching, and welcome back to another episode of the Harbor Trust Financial Podcast. My name is Shane, and I'm joined here today by my co-host, as usual, Phil. And today we've got a pretty heavy one, dense one, however, an interesting one. From what I know, Phil, you're pretty excited about this one.
I'm very excited about this one.
Well, that's good to know. So what's going to happen to all of us, Phil?
Well, today's episode we're gonna talk about we're all going to
The
die.
fact that we're all gonna die. That's what's gonna happen to all of us. Is we're all dying. Unfortunately, I hate to be the bearer of bad news, but if you're listening, you're gonna die at some point.
At some point.
I'm gonna die at some point. Phil's gonna die at some point. We're all gonna die at some point, and we get to talk about that. We have to talk about that, don't we?
Yeah, we do.
Yeah.
And the one thing one thing we want to talk today is the different types of life insurance.
Yeah.
Because there's so many people that will talk about, I have too much life insurance. Or I already have life insurance for my group plan. Why do I need more life insurance? Well, I have mortgage insurance. It's not the same. I don't think I have enough. I think I have too much. Mainly more too much than not enough that we hear.
Yeah.
But it's because a lot of time people don't know the difference that there's 5 types of life insurance. And those 5 types of life insurance will have different
implications.
Absolutely.
Yeah, absolutely. And I think it's important to understand that. So, we kind of kick this conversation off in the same way that we like to kick relationships off with our clients. One of the very early questions that we ask when we start consulting with a new client is, in your opinion, what is the use of life insurance? What is life insurance for? And I love that question so much because it opens up. It does 2 things. One, it kind of allows us to see what the client knows. And 2, it's great for us to understand what the general public thinks of life insurance. And we get so many different answers when we ask that question. The most common ones, I could tell you, are the people that are pretty much right on the ball and straightforward and simple of like, well, life insurance, if I die, my family gets money. You can't be more correct. Absolutely. At the basic, when you boil it down, that's exactly what it does. However, sometimes we'll get the answer of like, well, okay, life insurance. I'm pretty sure I have at work there. If I get sick or something happens to me, it's going to pay me, or is that the? And then I'll have to tell them like, no, that's not what life insurance does. That's other insurance products, which we have other episodes for. But life insurance as a whole, sum it up. You die, you get paid, but it's not that simple, right? There's a bit more depth to it.
There is a lot more depth to it. But another thing I'd like to add what you're saying is even by asking the question, sometimes we'll get to know the individual better.
Yes.
That they want to leave a legacy behind.
Correct. Yeah. So there's
Right?
a lot of
Or
reasons.
they want to leave a certain amount of money to a charity.
Sure.
Or whatever it is. So then we get to elaborate and making sure that they have those obligation in place set up for them whenever that time comes. And
Right.
Obviously, the younger you are,
The cheaper it is,
cheaper
the
it
better it
is.
is, the easier it is to access it.
Yeah, but there's with their different types of life insurance that we have, there are alternative to have cheaper ways, and that's what we're going to be talking about.
Great.
So
You talked about 5
Yep.
categories. So what are those?
the 5, there's a traditional life insurance,
Right.
okay, and then there's the universal life insurance, specialized life insurance, participating life insurance, which is gaining a lot of traction lately.
Yes.
Over the last few years, and simplified issue.
Okay.
Those are the 5 types of life insurance.
Great. So we kind of today start with
Yeah, let's start with the traditional life
Traditional.
insurance. So there's 2 types of traditional life insurance. Very simple. We have a term life and a permanent. So
Okay.
let's start with the term life. So if I give you an example on why somebody would get a term life and what is a term life. A term life insurance will protect a debt for X amount of time.
so like a temporary need.
Temporary need.
A need,
Okay.
yeah.
So it could be a 10 years, could go all the way to 40 years. So where people know temporary life insurance or term life insurance, as we call them, would be a house.
Okay.
So mortgage insurance is term life insurance,
right.
the exact same amount. You get a 25-year mortgage, you get mortgage insurance, that's a term life insurance because after the mortgage is done, that policy terminates.
Right.
So you don't need it anymore.
Of course, because the mortgage is paid off. It's not a
mortgage-
debt anymore. Why
Yep.
would you insure it?
Yeah, that's
Exactly,
right.
yeah.
And then so that's on the term life insurance. Now, when we talk about permanent insurance, that's a whole life policy. So something that you carry for the rest of your life.
So as soon as you take this product, and I want to be very clear here. So in term life insurance, if you take the product, what you'll typically see is cheaper prices.
Yes.
And a lot of people will buy these insurances thinking that this is something that, well, okay, well, it's going to be there when I die. That's not the case. It's very important to make the distinction between term and whole life.
Hmm.
Whole life will be there when you pass away. That's in the term whole. It's in the term. Yeah, it's in the word. I'm not going to start confusing terms. Term whole. It's in the word whole life. It's going to be there for your whole life. So it's very important to make that distinction. Whole life
Yeah.
insurance, it is guaranteed to pay out at your death.
Yes.
Term life, it can expire. It
Yep.
can renew.
Yep.
It can be transformed.
Yes.
A lot of things can happen with a term
Yes.
life. So
Yeah, there's
yeah,
a lot of things that can happen to a term life, but let's say somebody's older and let's say they're like they go for I want life insurance and I want final expense or whatever it is. A good alternative from a whole life if it gets really expensive for somebody who's much older,
right.
a term life could be a good alternative,
Yeah,
but also depends, it might not fulfill the
it might not
needs.
fulfill the need.
Right? If
Correct.
someone wants final expense and they get term life insurance, well, it's not fulfilling
Are you talking
completely
about
the
final
needs.
expense? What is final expense?
Final expense is covering the final
Expenses.
expenses.
So funeral costs,
Funeral costs,
any
yeah.
outstanding debts,
Yep.
anything that any maybe taxes at death. Uh, by the way, wouldn't you know it? Not only do you pay taxes when you're alive, in some cases you pay taxes when you die,
Well, you
or
don't.
someone else has to
Ah,
pay
there it
taxes
is.
because
Yeah.
you died.
Yeah.
So there's always tax implications. Isn't that part of the two guarantees of life?
Yes,
Right?
so and
Yeah.
having making sure like, going through the process to make
Yeah.
sure that all the debts are covered whenever somebody passes. It's the best thing because if not, somebody has to repay them. Those creditors needs to be paying back,
Right.
right? And but there's one thing in those a rule. It's not a rule, but one good thing about if somebody passes away and have student loans. So all students out there, that goes away. It's forgiven.
It's
So
wiped.
there's some people that are 30, 40 years old still carries a student loan debt, unfortunately, but it goes away.
So that's a good point that you make there, Phil, because a lot of conversations and dialogue that I have with my clients revolve around doing net worth exercises and understanding, your assets, and also with that comes understanding your debts.
Mhm.
And then when we talk about the debts, and part of this consultation, we're talking about insurability or insurance. I'll mention like I'll just ask out of curiosity to see again, just to do a bit of discovery on the client to see what they know. I'll ask, what do you think happens to all of this debt if you pass away? And they'll kind of be stumped. Some will say, well, it needs to be paid back. Some will know that, and some will answer, well, doesn't it just disappear? If you
Not
have
all of
credit,
them.
no, not all of them. And
Yeah.
student loans, yes, but credit cards, absolutely
Mhm.
not. If you have any credit products with an institution that is expecting you to pay back with interest, the odds are that that's not disappearing. Like
No.
somebody's got to pay it back, and the way that usually results is the person that you probably least would like to have to pay it back will be the one responsible to pay it back, and you wouldn't have planned accordingly. So that's kind of not fun, right?
No,
Yeah. So
exactly. So you got to make sure you protect the debt ratio. So if you go, you don't want somebody else to be
exactly,
involved
it's
in that.
typically the next of kin. Your wife, your husband, the kids, or
Yep,
somebody in the family is going to end up responsible for that, and we don't want that to happen. So we plan with life insurance.
exactly.
Yeah. So I'll let you keep going on that.
Yeah, no, that's okay.
Yeah.
And we talk about term life and then the permanent life. So with the whole life, there's some interesting option, and I'm just going to go do a brief overview about it
Okay.
because it's important. There's some people that can go for a whole life policy and can select, well, I want a whole life policy, but I only want to pay in for 10 years or 20
Right.
years,
Interesting, isn't that,
right?
listeners? Very interesting. So you're telling me that I can pay temporarily and keep the insurance forever?
That's correct.
Oh,
Yeah,
I
and
didn't
then
know.
there's the options. Now it's going to be a little pricier.
That'll be a bit more expensive.
But in the long run, you could save that money. So after
Absolutely.
20 years, it's done paying for it, and you have that policy for the rest of your life, and you don't pay for it. Another interesting fact with a permanent life insurance, you can take with or without cash surrendered value.
Cash surrendered value. What a
Yeah.
key word you just dropped into the microphone there, Phil. Cash surrender value. Can before we go deeper, what is cash surrender value?
So your policy can generate some tax-free income within that policy for you to either withdraw. Now, there's two ways. Without we should make another episode to go dive deeper into the cash surrender value. But in a nutshell, your life insurance policy can generate some
Yeah.
interest, generate some money, and there's two ways you can access that money.
Yeah.
You can do either a policy withdrawal,
Yes.
or you could do a collateral loan
Right.
with the policy. Now, if you do a collateral loan, it's tax-free dollars, but it will deduct your life insurance
Yeah. Yeah. It'll have an
amount.
impact on the amount that
Yep.
pays out of life insurance.
But you remove it tax-free, and you don't need to repay it as well.
And again, a collateral loan, like what's that? Why do we want a collateral loan?
Because if you want to access that money tax-free,
Okay.
in a nutshell.
Okay.
So when you remove that money, either if you withdraw it, then you'll have to pay capital gains on it.
Okay.
So without going too much in details, because we can dive in.
We have an episode on capital gains anyways. We have an investments episode
Yeah.
on the way, but I just really wanted to have a quick summary on cash surrender value because you're telling me that one, I can pay temporarily and keep insurance permanently. Two, not only am I keeping this life insurance, it's actually generating money while I'm alive.
Correct.
So that's kind of an important topic there because we mentioned earlier as we kicked off the episode, there's more depth. Yes, life insurance pays when you die. There's more depth to it. I wanted to be really clear when I said that. Here's where we're going. We're going into that depth. Life insurance can actually generate you money while you're alive. People don't know that. Life insurance isn't just for when you die. You can actually generate income, well, some form of income through the policy, through cash surrender value, depending at what rate you can invest and what rate you can, there's so many plans and models out there with life insurance for investors or for people who have money to put somewhere or just for somebody who needs to fulfill a life insurance need. Like I need to have my funeral paid for because when I die, I don't want my mom to whip out 10 grand out of her pocket to bury me. I would like that to be taken care of.
Yeah.
So that policy not only will take care of that, but it can generate money while you're alive. And I wanted to have a little kind of bubble about that. It's really a highlight.
Yep.
Yeah.
So there's actually 3 of those 5 policies will be able to have some cash surrender value.
Yeah.
Which bring on to the next one. So the second one, so we've talked about traditional life insurance that includes term and permanent in there. Okay. And the second one is universal life policy.
Okay.
Universal life policy, you can also generate some cash surrender value within your policy.
Right.
But a universal life policy is a little bit more complex because it has a lot of flexibility.
Okay.
Okay. Again, we're going to keep it simple, but a universal life policy, if you don't know how a universal life policy work, you shouldn't get one.
No, if you don't understand it in and out, then you should just stay away from it. You hear universal life insurance and you don't understand it and your advisor's not explaining it to you properly, just it's a big no.
Yeah.
Get away from it.
You need to understand because you need to understand when you can pull out money, how flexible it is, and it's flexible in many ways. And we can dictate one episode directly for universal life.
But who would benefit most of a universal life policy? Just quickly, because I'm just checking our time. But who would benefit from it? Like who would like to have a universal life policy? Because I'm thinking about myself if I'm listening to this and I'm hearing we're talking about all these life insurances and then you talk about this universal life insurance that I've never heard of, and I'm asking myself, well, should I learn about this? What position would I be in where a universal life policy could benefit me?
Well, it depends on your goals.
Right.
I mean, if you want to have money with your life insurance policy, or even if you want to have that flexibility, let's say somebody their income fluctuates.
Very much, yeah.
Somebody is on commission or something.
Or an entrepreneur, business owner, small business owner.
Yeah, and let me explain why. Because with universal life policy, there's actually 3 prices you can pay, and you choose. So you can have your premium. This is the premium.
That's the basic cost of the insurance.
No, not the basic, because I'm going to go to the basic. But that's the premium.
Okay.
And then you can have what keeps the policy afloat, so the minimum payment. So let's say an example, the policy costs you $50 a month, but the minimum payment could be $12 a month.
So you're just paying 12, you're keeping it alive, but it's not
keeping
really
that
it's not doing anything for you.
It's not doing any, it's keeping the policy alive, that's it. your head is above water and you're surviving,
And that's it.
basically.
And it's not generating any value. It's not
Zero.
generating any. Okay.
Zero.
And then,
But then you have the cost of the life insurance policy. You've got your minimum payment, and also you have a maximum payment.
okay.
So let's say your policy costs $50 a month, your minimum payment is $12 a month, and your maximum payment is $250 a
You
month.
can fluctuate anywhere in that depending on how well you
Yeah.
did this month. Maybe you're an entrepreneur. You have a bit of extra income to dispose of.
This
And if
month,
this month,
you
let's
want to
say,
put
yeah,
more.
and you want to put more this month, let's say next month you have a bad month, that's okay. You can keep your policy alive for the previous investments you made into it. It's still generating some form of cash surrender value, but you had a bad month and you just want to keep it alive, you can pay the minimum.
Yeah.
Okay, that's great.
So a very short story about a universal life policy. I was sitting down with a client. He was 30 years old. His wife was 29 years old. And 2 years ago, he got sold a universal life policy.
Okay.
And I asked him if he knew how it worked. And he says, no, but I know I have $1 million of universal life policy and I'm generating money with it and whatnot.
So he said he's claiming to have $1 million of coverage in his universal life
Yes,
policy.
and
Okay.
I said, do you know how it works? He's like, well, I have a general idea, and I kind of was questioning him, and it was another advisor that sold him that policy 2 years ago. And I said, do you have your policy with you? And I said, how much are you paying a month? And he said it was something around like the $30-$40 a month. And
That's a big bell ringing in my head. Yeah.
instantly, I was like, there's no
No,
way
not
he,
for-
he has a universal life policy for $1 million coverage, and he pays
$30.
$30 a month.
No shot.
So I said, do you have your policy? He pulls out his policy, and I looked at the policy. And how it was structured, there was two policies in one. He had a term coverage, a term life insurance for $950,000 for 20 years.
So here's why that price is low, by the way, when I talked about being cheaper on the term side where people will opt in quickly because of a cheap price. That's term life insurance. $950,000.
$950,000 for a term life insurance, blended with a $50,000 universal life policy.
There
But
it is.
here's where he got really frustrated, but also happy that I was able to go through it with him, because I said, okay, well, in 20 years, so you got it when you were 28 years old, and at 48 years old, $950,000 goes away, and you're left with only $50,000. But your $50,000, you're paying like $8 a month with it. And he's like, what do you mean? I said, well, because you're making only minimum payments, so
It's not gonna do anything.
generated zero income. So that agent, what it is like, go with a universal life policy. You're gonna generate money with it, and told the guy to go do your minimum payments. But by doing your minimum payments, you're not generating any money within that policy.
Right.
So poor guy thought the last 2 years was generating income with it within that policy, and he had no money because he was keeping the policy afloat and had $950,000 in term life insurance.
which was bound to expire.
Yeah. And also looking at the debt ratio and stuff, and I asked him, why do you have $1 million? Like, I don't know, that's what he told me to get. And nothing
That's
drives
a
me
bit
more up the
frustrating.
wall
That's very
because
frustrating.
there was no needs analysis made. He just gave $1 million to give $1 million.
Yeah.
And he's like, that's what he told me. And it's frustrating because there was no needs analysis made, and it drives me up the wall. So by doing a proper needs analysis, I said, you only need about $250,000. And by doing the assessment and whatnot, no kids, didn't even own a home, was renting. So didn't even have mortgage insurance or anything like that. Didn't even have like a mortgage or anything like that. So there was no high interest, just high debt. But he didn't need that $1 million. So after restructuring, I was able to restructure and whatnot. But just by asking those questions, and even you as a listener, if you're interested to looking at for universal life insurance, ask those questions. Ask your advisors to show you the numbers, because one thing, numbers don't lie.
Absolutely.
Right? An agent may, and there's some out there, trust me, there's some out there that are very, very good, but just watch for that. Ask to show the numbers. Ask them to show you a roadmap from, okay, well, in 20 years from now, because we have all these tools, that how much an approximate, not an exact
Yeah, yeah.
amount, but a approximate of how much we'll have in cash surrendered value in 10 years from now, in 15 years from now, in 30 years from now. So ask those questions about those numbers. So little short story about the
Yeah, for sure.
universal
And I
life.
think I think it's good to give a concrete example about that. But okay,
Yeah.
excellent.
Going to our third one, which is specialized life insurance. And a specialized, it's more of someone who wants to leave a legacy behind.
Okay.
A large amount of money to family members or charity, or just to leave a legacy behind.
Yeah.
Somebody with more of a high net worth and can afford that premium. And if someone wants to have a specialized life insurance, and you want $500,000, it's not gonna work. The minimum starts at 1 million.
Right.
So you need to be 1 million up in order to have that
So that's for the
specialized
high
life.
net worth individuals, people
Yep.
that are looking to maybe they're at the tail end of their careers. They've built maybe a business, or they have something that they're sitting on, real estate or investment property. It can be whatever you want, but they're at
Hmm.
the tail end of their career. They've made their money, and they're just now looking at the most efficient way, the most effective way to leave that money, or some of that money, or grow some of that money as a bit of a heritage, if you will, a bit more of a legacy to leave to the family.
I'm gonna comment on, and I like that you said the tail end, and maybe some listeners would be like, well, why would they wait later in life to do a legacy when we know that it's gonna cost more money? It's because in your 20s or even in your early 30s, if you don't have like kids or you don't have things
Right.
like that, you don't think about leaving a large sum of
That's
money
not
for the
something that's
family.
top of mind. And
Yeah.
anyways, like even at that scale, the odds of there are some people at that age bracket that definitely do have these products. I'm not saying that
Hmm.
doesn't exist, but for the most part, those people in that age bracket aren't really in a financial place where they're looking at making any decisions that are of that scale. But it does happen.
Yeah.
But the typical, we're talking to the average individual. It's probably not the case.
Yeah.
Yeah,
The fourth one is participating life insurance.
I love that one.
I know you do.
I love participating in life insurance.
It's been a hot topic in our industry.
Yeah.
Just by meeting a lot of people, it's funny because people will refer it. It was like, "What's that life insurance that you can make like a lot of money with it?" And I'm like, "The participating life insurance." They're like, "Yes," and I was like,
That's the
"So can
one.
you tell me more about this?
That's
Like,
why
how
people
does
like
that
that
work?"
one. Yeah.
Again, similar to a universal life policy, but less flexibility. But the options on it is incredible to it
It's
associated to it.
fantastic. It's probably my favorite life insurance product. I can't believe I just said that. I have a favorite life insurance product, right? Isn't that cool? I think everybody should have a favorite life insurance product. If everybody was as excited about insurance as we were about it. But participating in life is very fantastic because it does something very special. And I usually answer a question that I get from clients about when clients are talking about me, sometimes they'll ask me, how much does it cost? How much does it cost, Shane, to sit down with you and plan? It doesn't cost a dime to sit down with us. The way that the financial security advisors are compensated is when we do transactions, obviously, and we find a solution, then the company that we represent, or whatever company that we've distributed a solution for, will compensate us based on that transaction. So then they'll ask, well, how does the company make money? That makes no sense. How does a company make money? So then I'll tell them, well, if you have $100 in your bank account and you're at X, let's call it X bank, because I'm not going to name drop any banks here, but it's just like X bank, you have $100 in your checking account. Do you think you actually have 100 physical dollars when you're looking at your app in that checking account? Absolutely not. That's $100 in the bank's investment pool that they are investing at in their own portfolios. They're making money off your $100, and that's how they're profitable, because you're one of maybe 7 million people who have X amount in their bank account, and they have all that money to benefit from to invest in interest. So no different for any private insurance companies. It's no different.
Hmm.
What participating life insurance allows you to do is participate in that investment, which is, I think, absolutely fantastic.
Yeah, because then you
Yeah,
have you and the insurance company who participate in those
you're
dividends.
participating together. So what that means is exactly that keyword there, dividends. The organization that you have this product with, a participating life insurance product, well, they owe you a cut,
Mm.
because your premiums that you're paying for that life insurance is participating in their investments that they are profiting from as an organization. Companies need to be profitable to survive, pretty basic rule. But you are owed a cut of that, which accumulates in your cash surrendered value account in that product. So I just wanted to do a little talk on that, but I love having that little parabola with my clients when they ask me, like, I love that rabbit hole of questions. Like,
Yeah.
okay, well, how does the company make money? That makes no sense.
Yeah.
Well, here it is. And that's what a great gateway to introduce participating life insurance, because guess what? You can participate in how the company is profiting, and you can profit too on your life insurance
Yeah.
policy while you're alive. And you have a lot of flexibility with things that you can do with that cash surrendered account.
Mhm.
Right, Phil?
That's right.
You're right.
There's two there. If you want to dive into a rabbit hole on the participating life insurance, the Rockefellers, some of the wealthiest families in North America and even in the
I'd
world.
probably say like own half the world, maybe.
Okay, they build their legacy and their wealth
Right.
based
On participating
on
products.
participating products like that.
Yep.
There's also books, and you can look it up. Becoming Your Own Banker. You may have heard the term.
Yep.
That's another one
Yeah. Yeah.
that use
Yeah.
participating life insurance.
Infinite banking
Infinite banking.
is the concept,
Yeah.
and there's a book. Yeah, you said there's a book on it. There's a lot of material out on the internet that's completely free to learn more about it. But I think it's a really great thing because we name dropped the Rockefellers as a good example, but
Hmm.
you can start a life insurance policy that is a participating life insurance policy,
Hmm.
and guess what? You don't have to be a millionaire.
No,
You don't have to be a billionaire. This
no.
is contrary to the specialized products that we were talking about, where it's usually those high. Yeah, participating in life kind of falls in that umbrella, but I have a lot of clients that are in their early 20s that are in their career that have a lot of cash flow. They have a lot of disposable income, and they're able to invest in a participating life insurance policy, and it's beneficial for them. It actually works as a key component of their investment portfolio, and I think it's really fantastic. You don't have to be like 50 grand, 40 grand a year, 60 grand a year people. If they manage their expenses really well and
Hmm.
their cash flows looks really good, and we've done our analysis,
Yeah.
these products can make absolute sense in your portfolio. But they have to. We have to reason that, right? We're not just going to give it to give it, but it's just to say that this is not accessible only to the elite or the one percenters or whatever you want to describe that as. This is really a product that's accessible for a lot of people.
Hmm.
A lot of parents buy it for their newborns.
Hmm.
A lot of parents buy it for their babies because they have all of their childhood and their teenage years to generate that cash surrendered value. And by the time they're in their 20s, well, you got something pretty cool to look at. And guess what? Participating life is also one of those products that you can pay temporarily for and own permanently. But not only do you own it permanently, it grows permanently,
Hmm.
free of charge
Yeah.
when you're done paying for it. That is incredible.
Yeah. The investment keeps
The
going.
investment keeps going, and the value of your life insurance when it pays out when you pass away also keeps growing permanently.
Hmm.
And it's a whole life policy, right? Not a term life. This
Yep.
is a whole life policy,
Yep.
so it lasts until you pass away. I
Yeah.
think it's one of the most fantastic insurance products that's out there today. And a lot of resources are available online to learn more about them. And honestly, I
Yeah.
think we could do an episode just
Oh,
diving into that.
100%.
Yeah.
Yeah, because I am passionate too about this one. I mean, personally, I do have some for my family.
Yeah. Your
For
kids as well.
yeah,
Yeah. Your
for
two
my two
girls.
girls. And also they're paying for 20 years, and then they'll be able to leverage that to do some collateral loans
They
on it
can,
and use that money tax
oh my
free
God,
to
and do what
use
you want.
start a
Use
business, pay their education, travel the world, buy a multi-unit, whatever they want to
collateral
do.
against
Yep.
loans for cars, buying your
Yep.
house.
Use
Like
it tax
you
free.
name, yep, you name it. And it's such a great financial tool to have. Yeah.
For that. The last one is a simplified issue. This is an interesting product because the simplified issue would be designed for people want to have a quick approval, don't want to go through having a nurse coming at the home
Right.
or going through all those thresholds about a life insurance. It will be a little bit more costly from the traditional way
For the yeah.
for getting a life insurance, but someone who has health issues, this is the perfect product because we have less question. It's not a pre-approval of, and then we underwrite after something
No,
happens. We
no.
underwrite before,
Yeah.
but there's just limited questions, and it's a faster approval process.
Yes.
Okay,
Yes.
so to give you an example, because I did one the other day, I think it was last month. It was a 38 or 39-year-old smoker, and I forget. I think it was for I forget the amount. I don't want to say an amount because if I'm wrong, I'm wrong. But it was they were paying. It was $100 a month if it would go for the traditional way, but with a simplified issue was 120. So we're talking about a $20 difference.
So I'm
So
assuming the
I
life
asked
insurance amount
them.
was probably high because that sounds like a pretty high
Yeah, I can't
premium.
remember the amount, the exact amount, but I remember the pricing. It was $20 more.
Okay.
Okay, so it was
Okay.
120 versus $100 or
Okay.
101 or something like that. It was very close.
Okay.
So it was $20 more. But then I asked him the question. I said, "Do you want to go the traditional way? It's going to be less, going to be like $100, but because of what you've disclosed, you may have a nurse to come at the house and do that." And then he says, "No, I don't want that. I'll pay the $20 extra." Some people like it that way, and it was jet issued. It was issued right
It's
away,
done. It's approved, and
approved,
it's
underwritten before.
taken care of. And
Yeah.
yeah, as I would say from up home, northern New Brunswick, we would say tiki
Do. So the simplified issue. So if you're one of them that is looking for life insurance and you can't get approved by a company because of a health problem or whatever it is, look at some simplified issued product.
Yeah.
Look for someone, either a financial advisor that works with simplified issued product. We do.
Yeah.
If you want us to take a look at it, we will.
Absolutely.
But the simplified issue is key for people that has
Yeah.
health issues.
Especially those people that they and oftentimes when a client will approach us and the you have like clients that you can kind of put into a bucket. We could put a bucket and label it of the people that claim to be uninsurable.
A lot of
Right?
medications.
I take a lot of medications. I'm uninsurable. Maybe I
Had
have
cancer, let's say, in the last 5
yeah.
years. It's not because you had cancer in the last 5 years, you're not insured with
That's
with
absolutely
the
yeah.
life insurance. We can go
Absolutely.
through a simplified issued product.
Yeah, yeah. So a lot of people will approach us and kind of claim to be uninsurable, and that's where we'll go. We'll take that route in the simplified issue products, and for the most part, I've yet to have turned somebody around and say, yeah, we're completely out of options here, unless it's an age issue. Like you can't insure you if you're 79 years old, right?
Yeah.
But for the most part, people who claim to be uninsurable, they'll come to us and we'll work with a simplified issue product, and we'll be able to fill in some form of solution for them. And that's a really good use of simplified issue products.
And the amount of people we've helped that they say they couldn't get life insurance and go through a simplified issue
Oh
product.
my God, yeah, yeah, for sure.
And you know what?
Yeah.
They're the ones who thank us like crazy.
Of course.
It's like, thanks for showing me, thanks for taking the time, because there's some people that generally want that life insurance because they don't want to leave that
Well,
financial
they know they
stress
need it.
and they know they need it.
Usually because they've experienced a passing in the family. Something happened in the family where a financial, like the financials of death were now revealed, were now apparent, and they felt the stress and they felt the, oh God, what do I do, of that situation. So they know how important it is, right? But unfortunately, it sucks when we have to give a solution because of that, because something bad already happened in their family. So hence a bit more behind the mission of us doing this episode is be aware of that. Like, don't wait till something bad happens where your family's scrambling financially because of a death, and that was a person that wasn't insured or didn't have proper planning in place. Don't wait for that to happen. How about be proactive and maybe talk to your family about that? Hey, have you guys ever looked at this? Have you ever taken care of this? Like, no, we don't want to talk about that. That's boring. I think it's pretty worth talking about because we unfortunately are the front line in terms of seeing the reactions and the stress and what that brings on, the burden that brings on to a family when there's no proper planning behind it. It's really not fun. It's not fun at all. And we're very empathetic humans. I know you very well and you know me very well. We're very empathetic humans and we just really hate seeing that. So again, a bit more behind that purpose of why we're doing this episode is be proactive. We talked about those five products. This is a bit of a introductory episode. I know we're a bit long here. We're at about a half hour mark right now, but I think this is a really important episode in terms of your introduction, the listener, your introduction to the world of life insurance. We're going to have a bit of a series unpacking everything in depth because there's so much more that we can go into where we start looking at what actually makes it relevant to you. Today, we're not really connecting you with the right product. That's not what we do. And honestly, throughout the entire podcast, that's not what we're doing. But today is a good way for you to understand that spectrum of how life insurance works. Now you know there's a bit more depth and you know a bit more behind it.
And there's a difference between all these five as well.
Yeah, absolutely.
Different types.
Yeah, there's different, and there's exactly in those five. You can branch into more products with more variants. that are designed to cater as specifically as possible to somebody's need, somebody's specific financial situation. And our job is to connect a client with that when we consult. So I just wanted to kind of wrap up today's episode on saying, like today was a good introductory, kind of the entrance of the rabbit hole, if you will, of life insurance. But I think today's episode is very, very valuable, and I hope it answered a lot of questions for people about life insurance. Taking this 30 minutes to listen to us talk about this today, I can promise you will definitely benefit you, because just not knowing what we just talked about, and now you do, is already a new tool in your belt in terms of making your financial decisions. You're aware of this now, and you can now take action based on what you're aware of. Yeah.
Awesome.
Yeah. Yeah, for sure. So,
Well, thanks for being here, guys. Hope this was a help, and we will see you on our next episode.
see you soon, guys.
Bye bye.